Hello friends, welcome to Money Sprint. This is Hanisawa Chartered Accountant. In today's video, we will discuss how we can make and maintain a smart investment portfolio for us. So let's begin. What is a portfolio? A portfolio is a collection of financial investments like equity, debt, bullion, which is gold and silver, all commodities. It can be real estate and cryptocurrencies. All these are from an individual investor perspective. There could be other categories, but broadly, these are the assets in which an individual investor considers investing. Now, what is a smart portfolio? So, we always run a risk that the equity market may sometimes go up or sometimes goes down. And as an individual investor, I do not have the skill sets to time the market or to invest at a time when I believe the equity market is at a very low levels, and if I invest at that level, I'll be getting very good profits in the near future. So pretty difficult for me, and not possible for me as an investor to time the market. So what I like to do with my portfolio is to keep a diversified allocation of all my assets. So I'll not keep all my eggs in one basket. I will allocate portion of my portfolio into equity, into debt, into gold, or other category of investments. I also consider reducing my allocation in risky investments like equity with the increasing age. So, for example, if a person's age is 45 years, so he can consider allocating 45% of his total portfolio into equity, 45% into debt, and the balance 10% into gold. And as his age increases, he can consider reducing the equity from 45 to say 44 the next year, 43 the next year in terms of percentage, and increase the debt component. So this is one thing which reduces your risk with your increasing age, and is a good way to reap less riskier investment benefits when you retire. The third thing which I consider for my portfolio is to have systematic investments in risky assets like equity. Because as I said, it's not possible for me to time the market. So what I want is to have a system which makes periodical investment into equity, and in the long run, I can reap benefits out of these investments. One last thing which I consider for my portfolio is a periodic monitoring, periodic but not very frequent monitoring, and rebalancing of my portfolio based on the market value. So we will see one example how it can be done. So one disclaimer: when I discuss about having a smart portfolio, I am not suggesting any kind of investment or any advice, for which you should consider your financial advisor. And also that in my discussion, I am keeping three asset components, which is equity, debt, and gold, and not other assets, which is presently not part of the discussion, and maybe we can discuss separately. So let us look at one sample portfolio to get a better understanding. So when I plan my portfolio, and an ideal way to do it is to plan the portfolio. Say for example, somebody has 50 lakh rupees cash to invest, say in May 2021. So what he can do, instead of investing, say his age is 45 years and he wants to keep 45% in debt, 45% in equity, and for 10% in gold. So what he can consider doing is that he can invest around 43 lakhs in debt in the month of May, and approximately 1,87,500 in equity in the month of May. So this is nothing but the actual planned investment in equity, which is 22 lakh 50,000 or 45% of 50 lakhs divided into say 12 months. So starting in May 2021 to April 2022. So based on the individual's assessment, this period can be 6 months, it can be 1 year, it can be 2 years, 3 years, or even a longer horizon. Or if somebody wants to keep increasing the portfolio, this can be infinite also. So a salaried person who wants to do a systematic investment plan in an equity portfolio, he can consider having it, plan it infinitely based on his investment plan. Similarly for gold, so this sample assumes that the investment of 5 lakhs, which is 10% of the portfolio, was made in May. Now, what I would like to do with my portfolio is that after I have made an investment of 43 lakhs in May, so systematically मैं क्या करूँगा यहाँ से हर महीने for next 1 year keep withdrawing 1,87,500 from debt, which can be any debt. I'll give examples. So I'll keep withdrawing 1,87,500 and keep investing in equity. So this can be a systematic investment plan. This can be an equity class based on my discretion. So it depends on the investment horizon. So if I talk about debt, so what kind of instruments I invest in? So I invest in Bharat bonds, debt funds like corporate debt funds or other debt funds which are available in the market. Gilt funds, which are nothing but they invest in government bonds. Liquid funds, which is almost equivalent to an FD, but slightly riskier than a fixed deposit. So मैं ये सारे सिक्योरिटीज में इन्वेस्ट करता हूँ so far as debt in concern. And within this asset class also, the debt, there could be various instruments for which I can make a separate video, or you can reach out to me if you need any help in searching for any instrument. I can help you out. Similarly for gold, I invest through gold ETFs. So gold ETFs like Gold Bees or Kotak Gold ETF. So there are many ETFs which are available, which give returns equivalent to the appreciation in the value of, or depreciation in the value of gold. In terms of equity, I like investing in Nifty ETFs like Nifty Bees or SBI Nifty 50 ETFs or Kotak Nifty 50 ETF. There are ETFs which are available for the Nifty Next 50s, which is the mid cap index fund. So ETFs are available. For example, Junior Bs are available. Then also I like to invest in sectoral exchange traded funds based on sectors like FMCG, consumption, pharma. So based on my outlook of the market or that particular sector, I also like to invest in a particular sector at a particular point in time. Then there are equity mutual funds, which are direct plans in which the commissions are less. So to give an example, I have invested in some Nifty 50 equity mutual funds or Parag Parekh mutual fund. So I'm not promoting any mutual funds here. That depends on the individual outlook. But this is only a categorization of my investments. Also, for debt instruments where I am investing in liquid fund or gilt or debt funds, these are all direct funds where the commissions are slightly lower and therefore the returns are better. I also invest in stocks, good stocks out of the Nifty 50 index, and also sometimes in some penny stocks and mid caps, but very rarely. So for example, I'm holding investment in Reliance, I'm holding investment in Kotak Bank presently. So I also like to invest, but that depends on my horizon of a particular stock. So this is only an example. This 1,87,500 per month. This can be in a basket of equity also. Not necessarily you will invest in a particular stock or an ETF. So once you make your portfolio in a matter of say 1 year or 2 years, whatever time period you feel preferable, what is important is to maintain this percentage allocation in your portfolio. So how can you continue to do that? So the way I do it is that I always monitor the value of my investments based on the market price. So say for example, I will fix a time of say on a monthly basis or on a quarterly basis. I will see what is the current value of my investments. So let's say this 1,87,500 in Nifty 50, ETF which I had invested in on 30th May, that has become 3 lakh rupees, say on 24th of October. Now, based on the market value of my investments, if you see the allocation of equity, which I started at 45%, say it becomes 72%. So what I will do, I will withdraw some of my equity investments, and I will put those funds into debt. So what this will do, this will again balance the market value of my portfolio to 45%. So this way I will continue to balance my portfolio to have the desired allocation percentage for debt, equity, or gold. If somebody wants to introduce a new asset class, say cryptos, so the same can be included, like gold has been included here. So for example, if I want to invest in crypto, I can allocate 5% of my portfolio for crypto investment. So likewise, this sheet can be modified to suit the requirements of a person. If you want to use this sheet, do let me know in the email address which I'll include in the description, or let me know in the comments. So friends, I hope you like this video. If you do, then please do like, share and subscribe, and hit the bell icon. So see you in the next video. Thank you. Friends, I mainly trade in complex derivative strategies, and I was not very happy with the services of my past broker. Recently, I started trading with First Stock, who is a Bangalore-based discount broker, and till now I have been very happy with their services. If you would like to try them out, I will leave a link in the description below. Do check it out. Thank you.